Why are oil prices skyrocketing this week? Let's break it down. Remember to like and subscribe. This week, oil prices have surged, and here's why. Traders are on edge, fearing that Israel might strike Iran's oil infrastructure in retaliation for Tehran's recent missile attack. But don't panic just yet, there's a cushion in place that might help balance any shortfall. Robert Yager, head of energy futures at Mizuho Securities USA, explains that OPEC Plus has 5.8 million barrels per day of spare capacity. That's enough to cover Iran's 1.7 million barrels per day of sanctioned oil. OPEC Plus, which includes the Organization of the Petroleum Exporting Countries and its allies, is already planning to increase production. They decided this in early September, before Iran's missile attack raised the stakes. However, if Iran's output were significantly curtailed, replacing the lost barrels wouldn't be as simple as flipping a switch. Stephen Innes from SPI Asset Management points out that it takes time, especially with war-torn supply chains adding more hurdles. The real drama pushing prices higher isn't just Iran's missile strike, it's the looming question of how Israel might retaliate. Innes states that the fireworks would come if Israel targeted Iran's oil production directly. That would create short-term volatility across markets. If Israel disables Iran's oil industry, global markets will scramble to catch up, and don't expect the US to ramp up production significantly beyond current levels. The industry is already pushing hard, and any extra boost would take time and resources. Oil prices have found support from these threats to global supplies. On Wednesday, Brent crude for December delivery settled at $73.90 a barrel, while U.S. benchmark West Texas Intermediate crude for November delivery settled at $70.10 a barrel. Both hit their highest in about 2 weeks. Remember to like and subscribe. Brent prices climbed 2.6% on Tuesday when Iran launched missiles into Israel, and were up over 5% at session highs. But some argue that the oil market doesn't need additional barrels right now, especially with Chinese demand down around 3% on the year. OPEC Plus, meanwhile, made it clear that its members still need to make up for past overproduction. After a meeting, the group said Iraq, Kazakhstan, and Russia have achieved compliance for past overproduction based on September timelines. Saudi Arabia is also looking to claw back market share it lost due to production cuts since April 2020. OPEC Plus has theoretically removed 5.8 million barrels per day from the market, while U.S. production has increased by 200,000 to 300,000 barrels per day. Canada and Brazil have also grabbed market share, and Guyana has emerged as a new player. On Tuesday, oil prices reacted to a real threat to global crude supplies. By Wednesday, those concerns had faded, and gains became more modest. Some analysts doubt that Israel would directly damage Iran's oil infrastructure. If Israel were to retaliate, it would likely target refineries, not oil facilities or ports, to minimize the impact on global prices. In summary, while oil prices are spiking due to geopolitical tensions, OPEC Plus has the capacity to mitigate any significant shortfall. Still, the situation remains fluid, and market watchers are keeping a close eye on how things unfold. Thanks for tuning in. If you found this breakdown helpful, don't forget to like and subscribe for more updates. See you next time.